All right, let's get right into it. If you've been riding this incredible silver wave, chances are you're sitting on some serious, maybe even life-changing gains. But that brings up the big question, right? The million-dollar question. What's your exit plan? Today, we're going to break down a very specific, actionable strategy to lock in those profits, and it's all based on a fascinating ratio-based game plan. I mean, this is the question on your mind right now, isn't it? You've done great. Maybe you've made enough to wipe out some debts, secure your retirement, or just finally breathe a little easier. The gains are real. But a paper profit is just that, paper, until you actually sell. So how in the world do you know when it's the right time to cash out? And let's just be crystal clear about something right from the get-go. There is absolutely zero shame in taking profits. This quote from the source material just hits the nail on the head. Protecting what you've built is just plain smart, and your financial situation is yours alone. So if you're thinking about selling, you're not being greedy, you're being strategic. So first up, let's frame the problem here, which honestly is a great problem to have. We're calling it your winning dilemma, because the very success of your investment has created this new challenge. How do you wisely lock in those incredible gains? And look, the stakes are huge, because this run-up has been absolutely massive. The source we're digging into today highlights a period where silver rocketed from around $33 an ounce to over $90. That's nearly a 3x gain. Wow! When you're looking at returns like that, having a disciplined exit strategy isn't just a good idea, it's absolutely crucial. So, how do you even begin to build that strategy? Well, the core philosophy here starts by challenging how we measure wealth in the first place. It argues that to make a truly smart decision, we've got to find a better yardstick than the good old US dollar. And the whole strategy really hinges on this one powerful contrast. On one side, you've got the US dollar, which the source bluntly calls monopoly money printed out of thin air. It's a constantly depreciating asset. But on the other side, you've got gold, which has been a stable measure of value for literally thousands of years. So the key question becomes, why would you measure your real asset, silver, against a fading? This whole way of thinking is really fueled by a deep distrust of the official inflation numbers. The source doesn't pull any punches, calling the official data, the CPI, a CP lie. The point is pretty simple. If you can't trust the official data on the dollar's value, well, you can't really use it as a reliable yardstick, can you? You need a completely different way to measure. And this brings us right to the heart of the strategy. The solution that's proposed is a really powerful, yet surprisingly simple tool, the gold-to-silver ratio. The gold-to-silver ratio, or GSR, is just beautifully simple. All you do is take the price of gold and you divide it by the price of silver. That's it. The number you get tells you how many ounces of silver it takes to buy 1 single ounce of gold. This isn't about the dollar price. It's all about the relative value between these two precious metals. And that is the key metric for this entire strategy. Okay, so here's how you actually use it. According to our source, back in 2024, when the GSR climbed over 100, that was a massive buy signal for silver. It meant silver was historically cheap compared to gold. Now, the historic norm is somewhere between 60 and 80. But the trigger for this whole exit strategy, the big sell signal, is when that ratio drops below 50. That tells you silver has now become relatively expensive. Okay, so that's the theory. But you're probably wondering, did this actually work in the real world? Well, this next section shows you exactly how the author of this strategy put it into action. Let's walk through this trade. Back in 2024, with the GSR basically screaming buy at over 100, the call was made to get into silver. Then, you fast forward to January 14th, 2026. The ratio finally dropped below that preset target of 50. So what happened? An immediate disciplined action was taken, selling 25% of the paper's silver holdings. No emotion, no second guessing, just executing the plan. And here's the most brilliant part of what that first sale accomplished. Because silver had nearly tripled in value, selling just 25% of the position was enough to get back the entire initial investment. I mean, think about that. This is huge. The remaining 75% is now what you'd call house money. It's pure profit. You're on a free roll. All of your initial risk is completely off the table. So, this real-world example gives us a set of really clear, actionable principles. Let's go ahead and consolidate them into the key rules for executing this selling strategy for yourself. All right, here's the playbook. First, you set your targets based on the gold-to-silver ratio, not some random dollar price you hear on the news. Just ignore the noise.
Second, you sell in chunks. Just like you might dollar cost average on the way in, you do the same thing on the way out. Third, make your number one goal to get your initial investment back, just like we saw. And fourth, and this is so critical, reallocate that capital. Don't just sit in cash, which we already know is a depreciating asset. Stay invested.
Now, this is a really, really important distinction. The strategy treats different kinds of silver, well, differently. Your paper silver, like an ETF, that's for trading. That's what you sell first to lock in these kinds of gains. But your physical silver, that's a different story. That's your long-term insurance policy. You sell that last, if you ever sell it at all.
And let's just end on the core philosophy behind this whole thing. This is not about being bearish on silver or thinking the party's over. Not at all. It's about discipline. It's about taking a huge win off the table, reducing the volatility in your portfolio, and making smart capital allocation decisions. It's a proactive move, not a fearful one.
So that's the breakdown of one very disciplined, ratio-based exit strategy for silver. It really forces you to think, not in terms of dollars, but in terms of real value. And it kind of prompts the big question for every single investor out there. Are you on team hold forever, or are you on team take profits? What's your game plan for turning those incredible paper gains into real, tangible wealth?